Welcome to the Deloitte Green Dot Conversations. In today's episode, we dive deep into a treasure trove of insights gathered from the Africa Insurance Outlook for 2024 to 25. This year's publication features 10 compelling articles that explore everything from regulatory changes to the transformative power of generative AI and the modernization of the insurance landscape. Join us as we hear from industry experts Andrew Warren, Deloitte's Insurance Sector Advisory Leader, and Katlego Thaba, Associate Director of Actuarial Insurance Solutions. They'll be sharing some of the most exciting highlights and key takeaways from Deloitte's Global Insurance Outlook for 2025, as well as the Africa Insurance Outlook for the upcoming years.
Hello and welcome to yet another one of our Green Dot Conversations. As someone is in the insurance space, I'm particularly excited about this one because on the same day as we record this podcast, we are in fact launching the 2024-2025 Africa Insurance Outlook. And I'm also excited because I am joined by our Deloitte Africa Insurance Sector Lead, Andrew Warren. And we will be conversing and discussing some of the things that we have discussed and unpacked in the Outlook publications and just touching on a wide variety of themes and key trends that we are seeing in the African insurance landscape. And so just to kick us off, Andrew, welcome.
Thank you very much, Katlego. Great to be here. And also, what we're launching today actually is the global insurance outlook. And there's some good common themes between the outlook of the insurance sector on the African continent and those that we're seeing in the global markets as well. So good conversation to be had about what we're seeing in our local markets, but also how our local insurers are appearing against their global counterparts.
I like that, Andrew. I think then, even as you've queued it up, maybe then let's try to build it up from the perspective of, say, where do we see our local insurers, and then try to bring in those parallels and compare those themes that are also prevailing in the global space and affecting the insurance industry. So maybe let's start off on the local scene, and particularly on the South African side. What are we seeing from the latest results of big insurance groups, and what are some things that we can glean and draw from that?
Yeah, and as we do every year in our Outlook, we start out with having a look at the results of the predominantly listed insurers in the South African market, which is where our larger insurers are. But also in this Outlook, we've introduced a summary of the outlook in the East and West markets. Overall, and we looked at the results at the beginning of the year, but we keep track of the results all the way through the year, and some of the mid-year results have been released recently. Generally, sort of key themes emerging are one of growth in premiums. So I think we're seeing that the market has opened up from a growth perspective. All the insurers, all the major insurers are putting premium growth on the table. Okay. Different insurers are growing in different markets, in different subsectors. But I think one of the things that all insurers are struggling with is the extraction of value from the relationships they have with their clients. So while we're seeing good growth of business, what we are seeing in the life insurance market is a bit of a struggle on the value of new business. So the value created by getting new clients in. And in the short-term insurance side, while historically there have been some struggles with the claims ratios, at least in this market, the claims ratios for most insurers are turning around. And we're starting to see some profitable business emerging from the short-term insurance markets. So overall, I think it's a positive view, and the way that the insurers have been able to continue to respond from what was a traumatic period through COVIDs and lockdowns has continued over the last couple of years. And that has left the capital positions of the insurers in a good shape. If we reflect on what we came out of COVID with and the analysis we did in the prior and the year after that, which was the year before this outlook, we continued to illustrate that the resilience of the South African market continues to be demonstrated. The capital coverage ratios are still strong, and our market is standing up well to the broader market conditions that they're facing.
I mean, I find that very interesting. The strong capital positions that you're speaking of, the continued growth in volumes that the insurers in the South African markets are showing is a very interesting one. You highlighted as a start to the post-COVID period, there was that impact. But even beyond that, when you look at the Russia-Ukraine fallout and the subsequent consequences that we saw there, which are still prevalent, some of the lingering effects. Consumers are dealing with high interest rates. We have seen very pedestrian growth of the South African economy. And yet we are seeing growth in volumes and that level of performance. And what do you draw from that, Andrew, as far as, I guess, the resilience as well as the ability to adapt of the local insurance industry is concerned?
So I think we need to delve a little bit into the detail in the insurers to see what's happening. So one of the perpetual themes in terms of new business growth is the market is stagnant, but the innovation in insurance products means that the consumers are shopping around, so that they're exiting insurer A and entering insurer B for a similar proposition, but with the innovation, you're able to actually bring and attract clients on that basis. So the counteracting force there is that the growth is good, but the ability to hold on clients is quite hard. The second aspect, and you talked about the local market conditions, we've had, particularly in the South African market, but even in the global market, interest rates have increased. And in a space where interest rates are high, savings volumes start increasing. People are looking to save their money in a high interest rate environment. So there has been a move to some of the savings products. And in the South African market particularly, the annuity market is quite buoyant. So the amount of money coming out of pension savings and being put into pension drawdown products in the annuities has shown a good growth over the last 3 years and continues to do that. And that has got very good margins in terms of those products. And so from that perspective, we're getting good outcomes from our performance. Okay. Just shifting, I think it's important, while the predominant market forces for insurance on the continent are in South Africa, where we've got very high penetration rates because of the nature of the industry. When we look at particularly the East African market, we continue to be the market's continually being supported by slight increases in penetration rates. So we still have very low penetration of insurance in the market, in single digit from a percentage perspective, in terms of how much take-up of insurance there is in that market. And so there it's a different story of actually convincing the emerging market population to be buying insurance products and seeing the value of insurance products. And that is starting to come through, particularly in Kenya, and there's continued growth in business and new business volumes from that perspective.
I find that fascinating, Andrew, because even as we now maybe compare the different regions here in Africa, we spoke to a lot of the dynamics that affected South African insurers. But one thing that has been quite a common theme across the continent, as well as globally, has been the advent of that swear word, IFRS 17. And so it's going to be interesting that maybe we touch on how do we see and how have we seen the results of the big insurers changing, and how has IFRS 17 impacted insurers across the African continent? And then maybe delve into some of the comparisons and what are some of the opportunities in terms of growing the penetration rates in other African markets, particularly East and West, as you've mentioned. You highlighted that in South Africa, we have typically seen double-digit penetration rates for a while now, which is quite competitive with what we are seeing globally in developed markets. And then when we go into East, those single-digit growth penetration rates typically led by Kenya at around north of 2%, but the rest of the markets are very low, under 1% when you look at countries like Tanzania, you look at Uganda and Ethiopia in particular lagging behind there. So there's a lot of parallels to bring into play. But I want to see, what do you feel has been the impact as a start from an IFRS 17 standpoint? Because what I have read and seen from my exposure is that it's been a mixed bag. For example, looking at the impact on equity that has arisen as part of the transition to IFRS 17. What has been your perspective? What are some of the things that stood out for you?
Let's start with financial reporting and what the market has looked at. And then I'll hand to you then in terms of having a look at some of those the sort of consumer market impacts. As a quick primer, the IFRS 17, very familiar to a lot of the financial reporting preparers in the insurance industry, has been a really big overhaul of the way that the insurers prepare and present their financial results. It's been a 7-odd year journey for a lot of insurers. That's when the new standard was released. And this has been the first period where we've seen the results emerge.
Yeah.
Because of the fact that it's new and the importance of understanding performance under a new metric in terms of taking management actions, the actions taken on the results are quite muted. So we're not seeing insurers suddenly adopt the new performance metrics that are emerging from the new accounting standard automatically into how insurers are doing their budgeting, how they're doing their forecasting.
Yep.
They're still relying on metrics or performance KPIs that they understand. And I think that's the key evolution to the next step. If we look at the investment made in creating an infrastructure that allows this unified reporting framework to exist, the next phase is to make sure that starts being used. And while the focus has been on, to your point, what is the impact on the high-level equity numbers, what does it mean for the net asset values of the insurers, when you delve into some of the elements of what the standard is looking at, you start getting a rich information of understanding how the business is performing and how the finance teams are able to partner with the product houses or the business units to be able to better understand their business. We've seen different approaches by insurers in terms of their publications. And if we look at some of the results that have just come out in the June period, we're starting to see much more detailed disclosures around revenue and costs and insurance costs at different segments that are starting to excite the insurance analysts. So this move away from embedded value to IFRS 17 will start. But I think critically, and I think this is the disappointing side, and I actually had a conversation with a client yesterday about this exact topic, is the disappointment of the effort to reward ratio that has emerged from IFRS 17, and particularly for those not in the financial reporting space. So the business-facing community in insurers have been concerned about the operating expenses that have been consumed by the financial reporting teams to comply with the standard, and they're not seeing the value emerging in the market. What I think we're hoping to start seeing is that the spend that has been consumed by regulatory interventions, be it the reporting requirements or even the regulatory capital requirements, are going to be freed up and will give the opportunity to start investing in consumer-facing activities. So being able to grow the insurance market. Now, I know you've done a fair amount looking at the market and having a look at how technology is actually supporting the growth of upcoming insurers, some of the labeled insurtechs, as well as some of the evolving technology trends that are driving things. So give us your perspective of what you've seen in South and East and West Africa with the emerging fintechs that are going to start driving different consumer interactions from the insurers.
Yeah, thanks for that, Andrew. That's quite insightful. And as I dive into what we are seeing as far as getting to the consumer is concerned and becoming a source of increasing those penetration rates, especially in East Africa, technology has been at the forefront. And that's where the rise of insurtechs has been evident. And we've seen that also in South Africa. And typically it's around very creative technology-powered areas where insurtechs are able to do things faster, quicker, and have a good appreciation of the consumer in a manner that typical and traditional methods in insurance didn't appreciate. And that's where we are seeing a lot of opportunity. In previous Outlook, we spoke to embedded insurance. That has been prevalent, and we're seeing a lot more use cases of it in the South African market space. But beyond that, what insurtechs have brought is the ability or the intention to focus on understanding the consumer. What are their needs? When do they need it? On-demand insurance has become a big thing. You're seeing it with the likes of Naked, with Pineapple, etc. In the South African market space, you go into East Africa, you're seeing a lot of that as well. In fact, what we're calling out as key trends in the Outlook in East Africa, of the top four that we've flagged, we have data analytics, but we also have technology and specifically AI and generative AI in particular. And so there's a lot of opportunity there to accelerate what would have typically been to get into the consumer and converting that potential consumer into a customer for the insurance entities. And so technology has brought about an opportunity, but I don't see it just only in terms of getting the consumer, getting the customer. I think even in terms of transforming the operations of insurers, there's a lot of value to be gleaned there. Optimizing processes, reducing costs, whether it is the deployment of chatbots, coming up with ways in which you can get your from a telephonic assistance standpoint, your call centers. Now AI has gotten to points where from a text, audio, as well as video standpoint, we can generate content that mean we can reduce the burden in requiring manual interventions or requiring people available at times that may be inconvenient. And therefore we can reach customers at times that we wouldn't otherwise have been able to reach them. So I found that there's a lot of opportunity there, but there's also obviously considerations, concerns, and challenges that need to be navigated as insurers embrace technology and particularly artificial intelligence. Maybe do you want to touch on a few of those just to give highlights and flag considerations for insurers?
So I actually wanted to stop there before coming into that.
Yeah.
I think if I look at our generational differences, have the grey hair.
I need to paint mine.
You paint yours. But if we look at it, and from a personal perspective, and I'm intrigued from your personal perspective, AI, massive buzzword, we've got a view that the insurers are using it in certain aspects. And from a personal perspective, Naked is using it in a lot of their interactions with customers. And so we're seeing that use case. But from the perspective of your personal experience and what you think insurers are facing in terms of their staff adopting AI, what they're doing with it, how they're doing it, and whether or not the investments being made are being made in the right place. So what are you personally doing? And if you had to take yourself into an insurer's seat, what are you going to do with AI? And how's it making your life easier? And what would that mean inside an insurance company?
Yeah, I would have started with how I use it in my studies, but I might give away too much there. But there's a lot of opportunities. And in fact, what we have been focusing on in the insurance space is developing the use cases. At Deloitte, we have a fintech team. One of the use cases that we've been exploring and chatting to clients about, we have the ability through AI to take a picture on social media of someone working out, ingest that and use AI to recommend and suggest products. It can pick up that, oh, this person is working out, they're conscious about their health. What sort of products can we offer them from a life insurance standpoint, from a short-term insurance standpoint? And so there's practical use cases in that regard. But I think there's also, in most of our jobs, there's aspects that are very manual, right? And I like use cases of entities that encourage their staff to, for example, something as simple as applying robotic process automation in your day-to-day tasks. Which ones are so automatable that you actually can practically try to do that? But with practically what we do, we look at insurance contracts, reinsurance treaties. And oftentimes there's a lot of information there, Andrew. I don't need to read all of that, right? And with a private instance of a large language model, right, for example, a ChatGPT private instance that you can have from OpenAI, you can get summaries of the key aspects of that contract, and you get better at prompting the AI from the information you ingest to get valuable information very quickly. And then from a data standpoint as well, we've been trying these sort of cases to just provide data on history of claims that we are looking at. Challenge the AI. What would be your approach to coming up with a price for this? And there's some interesting things that we've seen AI tools picking up around the ability to identify the differences between a smoker and a non-smoker from a life insurance standpoint. But it also obviously highlights certain biases that you must be aware of, which are considerations around the application and use of AI tools and generative AI, that validation is key, testing the output is key as you grow in relying on that. But day-to-day practice, prompting, and just using the tools is the starting point for me. Learning safety skills and considerations in using AI tools, private versus what is public, is key, especially for professionals. And that's what I would say has been very instrumental for me in trying out cases. I know you yourself, Andrew, are very advanced in trying and pushing things out. Maybe before we transition, what are some of your valuable use cases on a personal level?
The ability to get a broader set of searches out of a generative AI type search environment. I think the ability to get documents drawn up quickly or documents summarized quickly. I think some of the key use cases at a sort of functional level in work, making things more efficient, being able to process a lot more information. I will put the sort of, let's call it the regulatory black hat on, where if we look at it and if we're looking at what's emerging, I think the regulators are concerned about the application of a model that does not give enough information as to how it's making decisions. If we look at insurance particularly, we're in a space where we differentiate our clientele through underwriting processes. Mm-hmm. And in some form and fashion, that is discriminatory at a particular level. Where we have models, our historic models of discrimination or underwriting that could be validated through a linear viewpoint that could make sure that our data wasn't inadvertently unfairly discriminating. We're able to audit that. And I think the regulator rightly is concerned about the extent to which a mathematical model using large data, so any kind of AI model, is producing, and it's being trained off a set of historic information that is not being able to be validated. The ability to land up with underwriting criteria that cannot be tested through the lens of what would be an equitable outcome in a diverse community. And so I think that the tension in insurance with AI is going to be the extent to which underwriting is a key feature of insurance and the ability to differentiate pricing or offerings from a computerized perspective, from an AI perspective, is going to bring underwriting and the entire differentiation process to the fore in terms of what is a fair price. And do we get to a point where the societal good of insurance, of being some social security backstop that allows for sharing of risk, doesn't exist anymore, and we're no longer sharing risk and allowing for the fortunate many to pay for the unfortunate few, which is the way I describe a lot of the insurance products. When that starts failing, has the insurance model failed because we get into a price point of one rather than a price point of the collective? And I think this is where locally and globally we're having a look and saying, well, what is the role of insurance, and how do we make sure that we get to the right customer outcome at a individual level, but recognize that we do operate in collective risk pooling as part of our business. And I think this is what we point out in the Outlook when we look at the AI opportunities, is we always need to be looking at the fact that we need to know what is happening there.
Yes.
And I think that's key.
I like that. Just maybe to piggyback off your point on the regulatory involvement and putting that hat on, one of the aspects that we've seen regulators, we touch on this in the Outlook around the Ghana market, getting involved is around supporting the industry's transition as far as adopting IFRS 17 is concerned. And that's been one of the major impactful themes we've seen across the continent. I was in Nairobi and working with clients in Kenya, in Tanzania, in Uganda, around the thought processes and embedding some of the things that have been brought on from a transformation standpoint on IFRS 17 has been a key aspect. And I want to use this to segue a little bit, because then in the same thing from a Ghana standpoint, I was in Sun City just about 3 weeks ago. We were having conversations around IFRS 17 is now here. Focus is now around how do you do budgeting under IFRS 17 and having those conversations. But I went to Sun City specifically because you were recently in Sun City, Andrew, for the African Insurance Exchange conversation. And you started, and you were particularly focused on ESG, sustainability, climate and equity discussions. And that's also a big theme that we have seen across the continent. Do you want to share a few things that you want to highlight as far as that theme is concerned?
Yeah, and I think this is one of those areas that I'm really excited that the narrative in I'm going to call it the South African market, particularly around inclusive finance, inclusive insurance, which has been a common theme as part of our transformation journey as a country, and making sure that the economy is more inclusive, and we're actually focusing on financial services in that regard. So the narrative since the 2000s in South Africa has been around, let's label it inclusive finance, looking at microinsurance, looking at serving the underserved. And that has been quite a quiet, let's call it a quiet global voice, but very prevalent in South Africa to understand how insurance is an enabler of economic participation, and economic participation across the South African economy and African economy is critical. Last year and this year in the global survey, the role that insurers play from societal perspective rather than just a product perspective is starting to come to the fore. And so part of that is, what role does insurance play in societies and part of the social security net? And if we think about insurance as a social good that provides a backstop when something happens from a risk perspective, or it's a backstop for retirement savings. So it's really part of this protection mechanism in the private level, where the public sector has run out of where they provide support, and where the private sector now provides support. So when we look at the ESG agenda, a lot of the societal agenda, the S agenda, is now coming to the fore in terms of how locally and globally we're thinking about how do we look at penetration rates, and how do we make sure that we are bringing the value of the insurance product into markets that historically have not been served. To your point on the Kenyan market, a very underserved market, but with a strong need. But linked to that, and this is where the environmental side comes in, understanding that the environmental and societal sides go hand in hand, and what's happening in society is influenced by the environment, and what's happening in the environment is impacted by society. And what I was discussing at the forum, the Africa Insurance Forum in Sun City that you referred to, was what are insurers doing and what do they need to be doing more of? And I think we had Tampa last week, and the extent to which climate change has increased the severity of the storms, and I actually heard it was earlier this week around how they're measuring it, and it's both in terms of wind speed and quantity of water that the hurricanes are now bringing through into areas at risk from a hurricane perspective, and that is evidence of climate change. And so when we start looking at the insurance market and bringing it down to a local level, the floods we've had in KZN, how have the insurers responded with respect to providing insurance cover and what it costs them? And what are they doing in terms of making sure that the role they play in broader society responds to both the insurance need at the customer level and their ability to influence behaviors of corporates who may be negatively impacting the environment? It's a very interesting dichotomy that the insurers are dealing with in terms of the societal good of the product at one level and risk management at the other. And so when we start having a look at it, one of the choices an insurer has in terms of being exposed to environmental risk is to remove cover from a particularly high-risk area. And that is often led by the fact that reinsurers are removing cover. The questions that we're leading in our global insurance teams are, what is the right choice? At the individual insurer level, removing cover is the right choice because you're exposed to too much risk. There's not enough capital to support that risk. But we're removing the risk sharing of those who are not in a high-risk area versus those that are. And how do we make sure that when we remove cover, we're actually leaving an exposed under or uninsured group who need that protection, and through no fault of their own, they'll end up in a situation where they're now exposed to more climate risk. And so how do insurers play in this game?
Yeah. Quite insightful, Andrew. Insurance is so exciting. We can have this conversation forever. And that's part of the positive. But maybe to start getting ourselves to conclude this conversation, you've called out some of the aspects there, but I just want to look at things from a global perspective and say, what are some of the things that we're seeing as common themes or even unique themes from a global standpoint? What is top of mind on insurance executives across the globe? I was at a CEO roundtable, South African one, organized by the Insurance Institute of Gauteng some 2 months ago. And it was fascinating to me, Andrew, to find that the conversation, 80% of the conversation gravitated towards managing new gen talent as part of or in relation to the biggest trends and issues that the executives felt they are dealing with. And we spoke about that in the Global Insurance Outlook for the past 2 years, actually, and we have just recently released the 2025 one. Some of it is what you've mentioned, and you can also just point that out as well. But what else do you just want to summarize and highlight when you put everything together, Africa and the global insurance landscape?
So yeah, and I think it's a good way of putting it all together. I think when we look at it and we look at all the where we are, where we sit globally, I think the key agenda on most insurance executives' minds is around growth and growth of their businesses. I think it's critical, continuous growth agenda after slow markets for different reasons in different spaces. So I think the growth agenda is going to be there.
Yeah.
In order to get that growth, I think one of the key sub-agendas that is in there is around efficiencies. The ability to generate profitable growth is key, and a lot of work is being done looking at the inefficiencies in the back office that is some of which has resulted from a long legacy of products. And something we haven't touched on, but worthwhile looking at it for those who look at the outlook, is the idea of product rationalization. We have a product construct that creates a product that lives for many years, and that creates an operational overhead. And one of the ways of solving operational overheads is actually simplify the product range. So that's happening in terms of making sure that the organizations are equipped, the insurance companies are equipped to actually go into the future with a strong and efficient cost base to be able to grow effectively. I think that growth agenda is very much, from a global perspective, starting to be anchored on finding markets that the insurance products can meet a need of, but recognizing that the reason that they're not being served is the way that the customers are being served is not in line with what the customer is looking for. And this points to changing the channel to market model, changing the interaction model. And what's becoming really, if you start bringing all these themes together, what's becoming really possible with that is the technology underpin. So the way that the underserved or the emerging market that needs to be served is looking to be engaged with is not in the old traditional way. And so a lot of focus on that. And then there's some other tactical global initiatives happening around tax treatment that needs to be looked at, but those are more specific for where we're at. So as I say, to sum it up, I think it's a growth agenda driven by efficiencies and driven by actually making sure that the insurers get to the customer. And I suppose to where we started, which was financial results and a lot of focus in the insurance industry about a set of rules on which a set of financial results needs to be created, the shift towards the insurance market's job is to serve a market and meet a fundamentally important need in a savings or security backstop of when something goes wrong, the market is there to serve them and delivering on that promise. And what is around the rest of that in terms of regulations and all of the other stuff is to support a vibrant industry that is trusted by the consumer base, that has a good access of advice and technology development to support it, that enables the market to go forward. So we've seen the market develop over the since we've been doing some of the articles we've produced, and where we're seeing the market going. Huge amounts of excitement, changing the focus into looking forward and not looking inside. That's right. And that's where we look to serve our clients and making sure that they're able to achieve their objectives of serving their customers in an awesome way.
Andrew, thank you for that. I think those are amazing insights. You've really succinctly captured and brought our conversation together. And I think more than anything, we would like to invite those who have joined us on this conversation to get themselves a copy of the Deloitte Africa Insurance Outlook, where we share these insights in detail. And we look forward to engaging and discussing more as far as insurance matters are concerned. Thank you.
Thanks for listening to Green Dot Conversations. Remember to like and subscribe. To keep up with Deloitte's latest thinking, follow us on social media and YouTube.